First, market hours. Stocks trade during exchange hours, for instance from 9:30 a.m. to 4 things why crypto feels like a roller coaster compared to steady stocks. And as someone who's traded both from the blue chip stocks to volatile altcoins, let me break it down. First, market hours. Stocks trade during exchange hours, for instance from 9:30 a.m. to 4 p.m. The usual working hours. Very predictable, with weekends off, but with crypto and its global actions, it's running for smarter and not hard. Which means more opportunities anytime, but also revolves with constant fear of missing out. Second, volatility. Stocks and index can swing from 5 to 15% on big financial crises like the 2008. But with crypto, 30 to 70% or even 1000% on certain drops and pumps in just for a few hours. And I've seen Bitcoin halve overnight, unlike Apple stocks' gradual climbs. Third, regulation. Stocks have heavy oversight from the SEC, making them safer for long-term investing. And I personally started with dividends with 4 stocks for steady income. Because crypto's decentralized and very Wild West fewer rules, it just means that more innovation, but also higher scam and risks. Fourth, liquidity and access. Stocks need brokers and often minimums. Crypto's easy entry via platforms like LBank, microtrades are now possible. And from my experience, stocks built my patience for compounding, while crypto honed my quick reflex for trends and technical analysis. Learning about that. And I would say that both have wins, so I suggest diversify. So, which would you trade more? And comment below, like, and follow for more insights. Wolf A-Quant out. Win some and dodge a few. Here's how. Crypto's full of gold, but also with risk and traps. Like for instance, honeypots, rug pulls. And as a trader who's experienced some and dodged a few, here's how to stay safe. Honeypot. These are scams tokens where you can buy in easily, but sellings, it's really impossible due to coded restrictions. Like a one-way trap where developers pump it and then drains the liquidity when you're stuck. Second, rug pulls. Creators hype a project and they just really attract investments and allocations, then abandon it by selling off the holdings or removing the liquidity. Value crashes to zero. And I've seen DeFi projects vanish just for overnight. Other bad actors in the space with phishing sites mimicking exchanges, fake airdrops stealing wallet keys, and that's what we call drainware, or pump and dump groups inflating degen or junk coins. So I wanted to give you some tips to protect yourself. So first, always do your own research and check for contract audits on tools like RagDoc or Etherscan, as well as use hardware wallets and never share your seeds phrase. And you should always verify the team on LinkedIn, as anonymous developers are a huge red flag. So I suggest start small, set slippage low on dexes, and watch for unusual tokenomics. So that's how you can learn about the tokenomics, by studying and reading the white paper. So here's my last conclusion. Scams evolve, but smart habits win. So share your close calls below. Hit like, follow, and trade safe with reputable platforms. Wolf A-Quant out. As someone who's aiming and dreaming to be a, how can you trade smarter and not harder? And as someone who's aiming and dreaming to be a quant trader, here are my top tips on goals, risk, and profits to level up your game. First, set realistic goals. Define your objectives, like 5 to 10% monthly returns, and not just on the get-rich-quick strategies. Also, pick projects aligning with your style. For crypto, focus on solid fundamentals and study the white papers, but always back it with analysis and utilize tools like indicators. Second, risk management. Never risk more than 1 to 2% of your portfolio per trade, as it will have the potential to wipe out your whole portfolio if you use more than. And use stop losses to auto-exit your bad positions, and I've really saved big by setting them at key support levels. Third, take profits. I would say greed kills. So you should plan your exit points upfront. For example, if you have entered a certain coin with an entry market price of 1.5 USD, I would say set your first take profit at 1.9, and then 2.2, and then 2.5 US dollars. I would call it the iceberg style of taking profits. And I suggest to track everything in your journal so you can review your wins and losses to refine your strategy. So apply this and watch your consistency. And for everyone, for every trader out there, please share your best tips so others can learn. Drop it in the comments. And as I wanted to conclude this video, trade wise, Wolf A-Quant out. Four things why crypto feels like a roller coaster compared to steady stocks. And as someone who's traded both from the blue chip stocks to volatile altcoins, let me break it down. First, market hours. Stocks trade during exchange hours, for instance from 9:30 a.m. to 4 p.m. The usual working hours. Very predictable, with weekends off. But with crypto and its global actions, it's running for 24/7. No closing bell, which means more opportunities anytime, but also revolves with constant fear of missing out. Second, volatility. Stocks and index can swing from 5 to 15% on big financial crises like the 2008. But with crypto, 30 to 70% or even 1000% on certain drops and pumps in just for a few hours. And I've seen Bitcoin halve overnight, unlike Apple stocks' gradual climbs. Third, regulation. Stocks have heavy oversight from the SEC, making them safer for long-term investing. And I personally started with dividends, with 4 stocks for steady income. Because crypto's decentralized and very Wild West fewer rules, it just means that more innovation, but also higher scam and risks. Fourth, liquidity and access. Stocks need brokers and often minimums. Crypto's easy entry via platforms like LBank, microtrades are now possible. And from my experience, stocks built my patience for compounding, while crypto honed my quick reflex for trends and technical analysis. Learning about that. And I would say that both have wins, so I suggest diversify. So which would you trade more? And comment below, like, and follow for more insights. Wolf A-Quant out. Gold, but also with risk and traps, like for instance honeypots, rug pulls. And as a trader who's experienced some and dodged a few, here's how to stay safe. Honeypot. These are scams tokens where you can buy in easily, but sellings, it's really impossible due to coded restrictions. Like a one-way trap where developers pump it and then drains the liquidity when you're stuck. Second, rug pulls. Creators hype a project and they just really attract investments and allocations, then abandon it by selling off the holdings or removing the liquidity. Value crashes to zero. And I've seen DeFi projects vanish just for overnight. Other bad actors in the space, with phishing sites mimicking exchanges, fake airdrops stealing wallet keys, and that's what we call drainware, or pump and dump groups inflating degen or junk coins. So I wanted to give you some tips to protect yourself. So first, always do your own research and check for contract audits on tools like RagDoc or Etherscan, as well as use hardware wallets and never share your seeds phrase. And you should always verify the team on LinkedIn, as anonymous developers are a huge red flag. So I suggest start small, set slippage low on dexes, and watch for unusual tokenomics. So that's how you can learn about the tokenomics, by studying and reading the white paper. So here's my last conclusion. Scams evolve, but smart habits win. So share your close calls below. Hit like, follow, and trade safe with reputable platforms. Wolf A-Quant out. How can you trade smarter and not harder? And as someone who's aiming and dreaming to be a quant trader, here are my top tips on goals, risk, and profits to level up your game. First, set realistic goals. Define your objectives like 5 to 10% monthly returns and not just on the get rich quick strategies. Also, pick projects aligning with your style. For crypto, focus on solid fundamentals and study the white papers, but always back it with analysis and utilize tools like indicators. Second, risk management. Never risk more than 1 to 2% of your portfolio per trade, as it will have the potential to wipe out your whole portfolio if you use more than. And use stop losses to auto exit your bad positions. And I've really saved big by setting them at key support levels. Third, take profits. I would say greed kills. So you should plan your exit points upfront. For example, if you have entered a certain coin with an entry market price of 1.5 USD, I would say set your first take profit at 1.9 and then 2.2 and then 2.5 US dollars. I would call it the iceberg style of taking profits. And I suggest to track everything in your journal so you can review your wins and losses to refine your strategy. So apply this and watch your consistency. And for everyone, for every trader out there, please share your best tips so others can learn. Drop it in the comments. And as I wanted to conclude this video, trade wise, Wolf A-Quant out. Four things why crypto feels like a roller coaster compared to steady stocks. And as someone who's traded both from the blue chip stocks to volatile altcoins, let me break it down. First, market hours. Stocks trade during exchange hours, for instance from 9:30 a.m. to 4 p.m. The usual working hours. Very predictable, with weekends off. But with crypto and its global actions, it's running for 24/7. No closing bell, which means more opportunities anytime, but also revolves with constant fear of missing out. Second, volatility. Stocks and index can swing from 5 to 15% on big financial crises like the 2008. But with crypto, 30 to 70% or even 1000% on certain drops and pumps in just for a few hours. And I've seen Bitcoin halve overnight, unlike Apple stocks.
Oh, Happy New Year, everyone. And once again, I'm your trader host in crypto and in stock. I'm Wolf A-Quant, your aspiring quant guide on your trading journey. So I can hear the 2026 as it rings. And of course, we will end it we will start it with the knowledge to at least supercharge your trading journey. So first off, a massive thank you to all of you Fierce Wolves who've turned it over on the past weeks. And we started this in our Christmas sessions last December 24th. It was all awesome. Real-time trades, and then we also experienced some technical difficulties, and then we also tried out high-risk trading platforms like what you call this? It's in the tip of my tongue. Um, yeah, it's a pump that fun. Yeah, so yeah, we tried that, and then we also uh, teach everyone about indicators, and then the difference between futures contract, and then as well as with uh, spot trading and copy trading. I've shown you how to use these indicators, and today, as we blast off into 2026, we're a bit leveling up, breaking down key indicators like RSI, MACD, and Bollinger Bands, which is our main indicators that we've used. And we will also give a discussion about perpetual contracts versus spot versus copy trading, and then I'll also give out some strategies, tips, and risk management to trade like a pro. And it's also perfect for newbies or I would say experienced ones. So I suggest let's make this year your best. So drop a comment of ready to hunt in the chat and we'll kick off with indicators. So yeah, right. Wolves, my favorite wolves. First lesson is that technical indicators. So these indicators, this is a math-based tools. They crunch the price data and spot trends as well as the momentum, the entries and the exits. And this is just really no crystal ball, but it's all quantitative and qualitative data that are being combined, and they also give you this edge. So we'll cover these three must knows in RSI, MACD, and Bollinger Bands. So starting with RSI. So RSI stands for Relative Strength Index. This momentum oscillator, it measures the price speed on a 0 to 100 scale. So typically it goes with the 14 periods formula. So 100 minus plus average gain and average losses as well. So key levels, you should remember key levels above 70 overbought. Below 30, it's a oversold. So, and then that's something that you should be aware of. So always buy the dip. And in practice on BTC chart, RSI dip like for example, let me just show it to you. So, as I was successfully opened our account, and look, our trade yesterday. It's a very good trade, and so let's see. So yeah, as just for a while, please. So yeah, as I was saying earlier, and I always remind everyone. Uh, Let me just have a few moments while I will do something else. I'll leave it to you guys. This current screen, so you can assess what's going on with our indicators.
mga sakit ng snap effect.
So yeah, going back to our indicators. So you can see here that uh, the indicator here dropped at RSI 25, and then it went back up here at 70, and then when it reached 70, it dropped again at 35. So it's always go back and forth, and then hit 70, and then now at 32, RSI 32. So yeah, I think we will have a good support here at 88,000. So, but here we also have good, better support at 88,300. So, this is a Filipino delicacy. It's called yema. I'm not sure if you guys can see it. So, it's made out of condensed milk and egg yolk. It's very sweet. It's always good for after meal. So yeah, we have a good entry from yesterday, and we are now up 25%. So like what else wanted to amplify also in RSI, what goes up must come down, what goes down must come up. So that's just basically a thing. And yeah, watch out for divergences when the price hits new lows but RSI higher. Of course, reversal is incoming. In crypto's volume, use a 1 hour chart for swings. Avoid solo pair with volume. So, any more questions? Please do let me know, and I'll always try to go back in videos and always get notifications with the questions, and I will answer that. If I don't know the answer, I will try to figure it out and provide you with my own understanding and experience. So, and we have here another one. It's called another Filipino delicacy. It's called torones. I actually forgot what does it taste like. I think the last time I've tried this when I was still a kid. So going back in the Philippines is always a great experience because you get to taste all these Filipino delicacies. Oh, mm. I just couldn't pass it. So, moving to MACD, or its name is moving average convergences divergence. So, it's a trend and a momentum in one. So, what we do here is we subtract a 26 period of EMA and estimated moving average here, and this uh, 12 period. So this 12 period, they plot a 9 period signal line and histogram for difference, and the crossover rule is MACD above signal is buy, bulls, it just means bulls charging. If it's below, sells, histogram growing past histogram positives. So the exponential moving average is something that will definitely help you for your moving average convergence divergence. So yeah, and let's just show it here. So you can see in here before the huge dip, there's a pump that occurred here, and historical shows that the crossover just this during mid December it sparked a pump before the dip. And the cons of this is it lags in choppy market. So filter with trends, and to be a quant, always backtest with MACD with the historicals. So yeah, last indicator is Bollinger Bands. Let's go with the well, as you can see in here, what I mentioned, right? If it's narrowing, there will be a breakout and if it's a widening, there will be a price correction for that one. And for instance, when this one narrowed down, there was a breakout, and here it's widening, and we can see a price correction in the upcoming hours. So yeah. It's something that you should be aware of too. Like if, like, it's narrowing when it squeezes, the bonds tighten. It just means that there's low volume, and there's a breakout that is just looming, and the expansions ride the trend, and it's oversold. So strong buy for that one, because there will be a price correction for that in the coming moments. Now, with this ongoing, let's shift to trading types on our platform. So, to find out what suits your style, your way, your strategies, is to compare what is perpetual contracts, what is spot trading, and copy trading. So, spot trading is really simple. It's just a buy and sell on your actual crypto at the current price, like Bitcoin USDT. So you choose a pair, like for instance, Bitcoin and USDT. So you have a USDT on your account, and then you wanted to buy a BTC, a Bitcoin. Then you will purchase that specific pair. So you actually own the asset, no expiration, low leverage, just 1:1. And the process is very straightforward for holders, and dividends and staking is really possible with less risk. The cons is no shorting without margin, and it only gains only when the price goes up or increases. And it's ideal for beginners or long term. And I've built my base portfolios in specific coins like XMR Monero, then also uh, Ethereum, and yeah, basically um the spot held strong during crashes. Next is futures perpetual contract. It is the advanced way of trading, and the trade price direction is without owning. You don't have any specific coins or tokens, and you just purchase the perpetual contract with leverage up to 125x on, for instance, for what we're using right now is LBank, and there's no expiry like traditional futures. The funding rates keep it tied to the spot. So the pros is it profits up or down. It just means that long or short. So if you think the market will go up or increase, you position for long. If you think the market will go down, you position for short. And it really amplifies your gains. So you can turn your $1,000 into $10,000 on a 10 times move. So the cons is liquidation risk if wrong, fees each small accounts, and demo. You should always um, like for example demonstration on these specific tokens. It always gives something for you to leverage. So yeah, finally, copy trading. So of course, passive. We all wanna earn passive. We've talked about owning up the actual asset and then leveraging the asset, and then now using passive. So with copy trading, from its name, copy trading, we literally mirror pro traders then that move automatically. And for instance, LBank offers that, and we should always look for the top performance and set a specific amount and let it run. So the pros is learn while earning and no constant monitoring. Great, great for busy volts like you. And the cons is just you also copy the losses. And the fees, it's 10 to 20% of your profit. And in 2025, uh, of course, they nailed it at altcoin rallies. So yeah, just another tip is that you should copy with the win rate of more than 60% and drawdown is below 20%. And yeah, I'd like to know which type suits you. Is it spot for safety, features for thrill, or copy for ease? So yeah, definitely let me know in the comment section if which one would you want to use. Mic check. Okay. So we've discussed the indicators. We've also discussed the type of tradings, and yeah, basically, we'll now move forward with our strategies, the core of trading, which is the strategies and my tips and risk management. And without this, even you are using the perfect indicators, it flops. And also, you choose your trading types, it doesn't work because at the end of the day, it's still you who's executing all of these tools that are available out there. So, strategies. You should move to the trend following. So always use MACD for a direction, the moving average, convergence, divergence. It moves for the direction, and you should always enter on Bollinger breakouts, and it just means reversion. So buy RSI over when it's oversold, and sell overbought in ranges. So scalping for futures, quick 1 to 2% on perpetuals on tight stops, swing for spot, hold for 3 to 7 days on indicator confluences. Carpistrat diversify 3 to 5 pros across styles. And what I always say is do your own research always with combination of indicators and always backtest on demos. So news integration it also affects. So trade Bitcoin perpetuals and post Fed announcement, and it will position your sizing 1 to 2% of your trade max. And you should always journal everything so you can review your wins and losses. And for risk management, it's really non-negotiable. So set stops at 1 to 3% below entry. Use trailing stops on winners, and always diversify 30% on spot, 40% on futures. This is just an example number, and then 30% on copy. Also, never revenge trade. Walk away after losses. Emotional tip: trade what you can lose. I've learned the hard way in stock crashes and crypto plunges. So, tools is always position calculators. Remember, 2025 taught us risk management turns survivors into winners. And apply this, and 2026 will be ours. So, yeah, we've covered RSI, MACD, Bollinger Bands. Also, we've differentiated what is spot trading, what is futures trading, as well as copy trading, and yeah, I've given some tips, strategies, and risk management to win big. So yeah, we will keep up in the next 2 hours, 2.5 hours, and then we'll get on a good trade. Okay. Oh, another one. If you're choosing a your margin mode, always use for the isolated mode because it doesn't affect all your funds in your portfolio. And leverage wise, don't go beyond 20. So we position in pixels. We entered at the price of 0.00793 and we just long it, our long position. So let's check our position right now. And yeah, we're still we're still assessing the market out here. We have a good entry here, so we're still climbing up. I think we'll hit the take profit in soon time. So, in the next 3 hours or 6 hours. So, but I think if we reach just the 60 or 65, I think I'll pull out my position already. It's a good trade already. Let's scout for more tokens to review. So yeah, um, let's also assess some market news here, and let's just for a while. So Bitcoin news. Let's look for Bitcoin news update December 31, 2025. Last year of 2025. So let's go with the economic times. So Bitcoin near $88,000, Ethereum at $2,900, and as the crypto market ends in 2025 on a subdued note. So based on the article here, Bitcoin nears the $80,000 mark and Ethereum trades at the 2,900 level on Wednesday. As the crypto market ends 2025 on a subdued note, with both struggling to regain momentum. Bitcoin and Ethereum were trading at 26 and 2,968 levels respectively as of the writing. In the past 24 hours, Bitcoin and Ethereum went up by 1.4%, 1.4%, among the major altcoins being Solana, and Hyper to 1.30% in the past 24 hours, whereas Bitcoin 0.05 and 0.2 respectively in the same period. So Riha Segal, a research analyst Delta Exchange, said that despite earlier highs above $126,000, Bitcoin risks closing the year in the red, signaling consolidation rather than a cycle break. Show slowing wealth accumulation and ETF outflows exceeding $6 billion in quarter 4 of 2025, the highest of the year, highlighting institutional caution. However, analysts expect renewed inflows once the Fed resumes easing in 2026, and a dovish shift, improving liquidity in stable macroeconomic Hey, what is up, everyone? What is up? Hey, what is up, everyone? What is up? So I experienced some technical difficulties in the past minutes while I read on the news.
Yung kalahati ng lechon. Wow. Yeah. Ito gagamitin yung sibuyas pero hindi lahat. Hindi pa naman sila nakatakas. Pero si Akira parang
Sorry, we were experiencing some internet technical difficulties as we are having some unstable internet. Our position with Pixel is not moving that much. We are still at consolidation phase. So yeah, I think my internet is now stable. Mic check, mic check. So yeah, I think I'll just give you some expectations for our 2026. And yeah, it's been really a roller coaster. And this is teaching us a lot of more of resilience. And yeah, key learnings for the beginners is what I wanted to amplify is that volatility is king. So crypto swings to 50% in days or even hours, unlike stocks, And fundamentals matter as well. If you're even though you are 100% technical, there's you just gotta give a bit of fundamentals, giving it a matter. Halvings and upgrades like the Ethereum Fusaka recent upgrade, and it drive long-term wins. But of course, hype bubbles they pop. So for the next one, scams evolve and honeypots and drugs they hit hard, reminding us to do your own research. I suggest also using your own hardware wallet for long-term holding and spread out your funds in multiple wallets. And yeah, and in the institution ruled ETFs and firms like MicroStrategy, if they stock up Bitcoin, it shows that big money is here to stay. So diversify wisely and spot for safety and features for leverage and risk management save portfolios in dips. So let me know in the comment section what was your 2025 highlights or headache. Share in the comment section. So yeah, also with the information and based on pros from Grayscale, Bitwise, Coinbase, and many more, here's what to expect on the 2026 based on the prediction, And yeah, BTC breaks records and and they're saying that they might pass 2025 highs, potentially $150,000 as institutions pour in, and it will be less volatile than stocks like Nvidia. Bitwise thinks so, ending the 4-year cycle for steadier gains. So yeah, those are just the three predictions that they are saying. So um, to keep this our vibes high, so I'm gonna give you some five quick trivias, blending history and 2026 futures. So trivia number one: by 2026, over 1.5 billion people could use blockchains daily, up from 1.4 billion in 2025 per Chainalysis report. Thanks to mobile wallets and AI integration, it's now easier to adopt and for easier integration. Trivia number two: ZK VM Tech or Zero Knowledge Virtual Machine. It might run on your phone too by mid-2026 per A16Z, and it will just proves to shows the transactions privately like Magic Privacy Shields for trades. And trivia number three, prediction markets could hit $100 billion volume in 2026 per Coinbase. Bet on elections or sports via crypto, more accurate than polls. Trivia number four, tokenized RWAs, SVB predicts $10 trillion market by 2030, starting big in 2026. Own art or property fractions without banks. Hold on. So trivia number five, Bitcoin's energy by 2026, 70%. It will be 70% renewable mining, flipping the wasteful meat, greener than traditional finance. So yeah, those are some of the things that you should keep in mind that will occur. And yeah, that's something to share. So yeah, I just wanted to outline some lessons. So yeah, number one, stay informed. Follow sources like credible reports to track institutional move for early edges. Diversify smart. Mix Bitcoin with RWAs, with AIs, with different altcoins, and yeah, so that you can have a lesser risk. There will always be risk, but there will be lesser. So risk first, set 1 to 2% stops per trade. So and during the 2025 dips, it taught us preservation over greed. So yeah, number four, learn tech, dip into AI tools for predictions, but backtest manually first. So yeah, if you're going to use for predictions for the prediction market, use AI tools for that one. And yeah, community power, join communities like ours, and share learnings and avoid isolation in volume. So yeah. And yeah, we'll be here for the next 1.5 hour, 3:30 and 4. Yeah, we'll be here. So stay put. Will be. Oh, our position is getting good. I'm assessing if, I'm trying to assess on if we could leave this in the next few days. Instead of scalp, we'll do a swing trade. So our position was really solely for a swing trade, but I've tried to decide that we might do it for a scalp, which is we can already close our position. Hold on. Just for a while. Hello, hello. So what should be our decision for this one? Yeah, uh, streaming is back. We just had some internet difficulties, but yeah, we are so back. So we are just waiting for our market to have a price correction so we can enter again. And my last position that I was contemplating on whether we will change our strategy into swing trade from scalp trading. We went back with our original plan, which is the scalp trading. So we are now at crypto bubble. Okay. So yeah, it's a bit uncomfortable in my feeling. Pardon for that. Yeah. So we move forward. So let's study what is XTC. So it's gaining 1.3% from the last 24 hours. Let's see. Let's check. So based here, the XDC network, formerly SynFin, is an enterprise-grade EVM compatible layer 1 blockchain focused on streamlining global trade finance and tokenizing real-world assets. It uses a hybrid architecture merging public and private benefits and a delegated proof of stake consensus for fast, low-cost, and scalable transactions, supporting smart contracts for digital finance, supply chain tracking, and remittances while adhering to compliance standards like ISO 20022. Hmm. What is Chili's? Alright, Chili's is a cryptocurrency that powers the socials and a Web3 ecosystem for sports and entertainment fans, allowing them to engage directly with their favorite teams through fan tokens, voting on club decisions like jersey designs or music, earning rewards, and accessing exclusive perks. It's a native utility token used to buy these fan tokens and participate in Chile's chain, a blockchain built specifically for sports. Hmm. What is mix finance? Mixed Finance is a decentralized derivatives exchange DEX for on-chain perpetual futures trading, letting users speculate on crypto price movements with leverage up to 50 times. Using a unique matching pool mechanism (MPM) for efficient low slippage trading and a P2P pool to P model, it aims to offer a user-friendly cross-chain experience bridging traditional finance with DeFi through its native Mix token, which provide utility, discounts, and governance. So we just opened a long position on our futures position. And oh, mm, thank you.
Stop.
As of today, we are still hovering. The Bitcoin price is still hovering at 88,450. And yeah, after a choppy year, we are up massively from 2024, but pulling back now on December with highs nearing at $90,000. And yeah, Let's start with the basics of price action. So, how Bitcoin's price moves over time. So, telling us that the market's story in the technical analysis and uptrends, higher highs and higher lows. So, downtrends, lower highs and lower lows. So, so as you can see here, higher high and then higher low. This one, higher high, higher low, and then lower low, lower low, higher low. Mhm. So, yeah, but Bitcoin's been a long-term uptrend since earlier, around $50,000 to $60,000, pushing to all-time highs above $100,000 mid-year before consolidating. But zooming to quarter four from October $70,000 base or our $70 base and our uh, pinnacle top, which is 124,000. So I just wanted to give some beginner tip. Draw trend lines for connecting swing lows for uptrends, like the one that I've shown. And if the price breaks the line with conviction, trend reversal, and practice this. It's a what it this year. So yeah, once again, I wanted to remind everyone that the indicators that you will be using is, of course, something that will definitely help you through your trading. So yeah, RSI. You should always keep in mind that the RSI is the relatively strength index, and of course, it will definitely help you on your signal whether to buy or to sell. This is what we call Carabao mango or Carabao mango. It's basically mango, but it's not yet ripe. So let's start with the basics of price action. So how Bitcoin's price moves over time, and it's telling us the market story. So yeah, that's what we do to find everything. So yeah, let me just find for a few tokens. Oh, it just dropped. The price just dropped. I think before our stream ends, I'll just give some few tips here. Like maybe we wondering what is price action and all other things. Like let's break it down. So yeah, to think, you may be thinking what are like the trends, candlesticks, and the volume. What is chart reading, and no fancy tools needed or indicators, just understanding how price moves and what they tell us. This is perfect for beginners starting their trading journey or veterans or experienced ones finding their basics. So we'll use simple examples from crypto and stocks to keep it real. So yeah, let's chit chat and so that we can learn from all of this. So and maybe please let me know what's one trading term that confuses you. And share now while we are still diving in right now. And yeah, first up, what is price action? So, in simple terms, price action it's the study of how an asset price moves over time. on raw data on a chart showing opens, highs, lows, and closes without any overlays. Like for example, right now the price action is 88,521. Oh boy. Our price is pumping, pumping, pumping. Yeah, that's the price action. So what's happening right now? There's the price movement that's occurring from time to time. So yeah, price tells the story of a buy versus the sell battle. So for beginners, price action focus on patterns in these moves, up and down or sideways, to predict future behavior. For example, in a crypto like Bitcoin, if price jumps from, like what happened, from 88,400 to 88,500. So quickly, that's strong bullish action. Buyers winning. If it grinds down slowly from 88,400 to 88,000, and bearish pressure, it means sellers in control. Key ideas: past action often repeats due to psychology. Traders react to levels they've seen before. So why use it? It's just basically universal. So it works on stocks, forex, and crypto, and helps spot trends early. So pro tip: start with daily charts for a big picture. Zoom to hourly for details. No math needed, just observation. What's price action look like to you? Let me know in the comment section. Mm. So yeah, that's the price actions. So next, what is support and resistance? So moving to support and resistance, these are like invisible barriers on the chart where price often pauses or reverses. So support is a price level where falling prices tend to bounce back. Okay. We're just waiting here. So the support is like this one, $88,187. So this is a major one support. Their support is 7,868. So whenever that the next price action tends to move on this level, other buyers tend to wait on here, and they have a basket waiting to purchase, like on this one too. So yeah, that's what happens. So it's like a ceiling seller's guard. So I mean, a support basket for buyer's guard. So support is a price level where falling prices tend to bounce back up like a floor buyers defend. So resistance is where rising falls prices stall like a ceiling seller's guard. So how do they form? From past highs and lows or psychological numbers, like the past numbers. Beginner analogy. Imagine a ball bouncing on trampoline support or hitting a roof resistance in a stock like or crypto. So if a price drops to $150 multiple times and rebounds, that support. Buyers see value there. If it hits $200 and falls back repeatedly, that is resistance. Sellers take profits. In practice, breakouts above resistance signals uptrends. Breakdown below support means downtrends. So they can flip roles. Old resistance becomes new support after a break. So tip, mark them on your charts with lines, trade bounces or breaks with confirmation. Red flags, fake out in low volume, questions on these levels. So anything, please leave in the comment section. So yeah, what are chart patterns? So now chart patterns, these are shapes, prices from over time, hinting at what's next. They're like puzzles, spotting the pattern, predicting the move. Two types: continuation, which means trends keep going, and reversal. It just means that trend changes. So begin example for to tell you that continuation, bull flag, sharp up move, flagpole, then sideways, consolidation, flag breaks higher, rally continues, like a pause for a break in and uptrend. Reversal, head and shoulders. Three peaks left, shoulder, higher head, right shoulder, neckline below. If price breaks neckline, downtrend ahead. Inverse for bottoms. Triangles price calls tighter, ascending for bulls, descending for bears. Breakout direction wins. In crypto, a descending triangle on Ethereum, let's say for example for Ethereum at $3,000 might signal a drop. In stocks, a cup and handle rounded bottom with the small pullback often launches ups. Tip, confirm with volume, strong patterns have rising volume on breaks. So yeah, anything. So yeah, let's move with trends and candlesticks. So quick on trends and candlesticks, the ETC, building blocks. So trends overall direction up, higher highs or low, down lower highs, lower lows, sideways flat, Draw lines connecting lows for uptrends or highs for downtrends. Break signal changes. Candlesticks. Each candle shows one period action. Body, open to close, wicks, high low, green up, red down. Patterns like doji or indecision, tiny body, or also like hammer bullish for reversal. And yeah, this is just example of series of green candles with small wicks. So yeah, last volume. So how much is traded? High volume validates move real interest. Low suggest fakes a breakout on surging volume, a legit one. So wrapping up, and I wanted to mention that price action is your foundation. Master support and resistance, patterns, trends, candles, and volume for smarter trades. So, yeah, we've had a great 3 hours of our time, and I want to thank everyone. Uh, oh, oh, there might be a breakout here. Mm-hmm. So yeah, it's been a great pleasure, everyone, and we will see you again next year, tomorrow, the next day, and so on. So uh, we hope and we look forward that our partner, our credible platform, will definitely support us in our next journey in technical analysis trading session, as well as with our crypto education initiatives that we will be conducting in the next quarter or more. And that's what we are looking forward. And yeah, once again, we wanted to thank everyone for streaming in and staying with us for the past 5 days, ever since we started this, and we will continue this with with the constant support of LBank. And yeah, that's something that we're really looking forward into. And yeah, I will commit myself into giving you all such details, learnings, and experiences that I have acquired and learned along the way, so that you can learn and refrain from the mistakes that I have done in the past years. So, yeah, we will be in our new position again in the next in our next trade. So yeah, thank you everyone, and I want to greet everyone a happy, happy, happy New Year, everyone. And I pray and hope that everyone is doing well. And yeah, I'm really sorry for that one. Everyone's trying to celebrate already as early as now. So yeah, again, thank you everyone, and happy New Year, and see you again next year, which is in the upcoming days. Actually, tomorrow rather. But yeah, we'll have a rest day to spend time with our family, and yeah, basically see everyone and have a great night.
Sir, compared to steady stocks, And as someone who's traded both from the blue chip stocks to volatile altcoins, let me break it down. First, market hours. Stocks trade during exchange hours, for instance from 9:30 a.m. to 4 p.m., the usual working hours. Its global actions, it's running for 24/7. No closing bell, which means more opportunities anytime, but also revolves with constant fear of missing out. Second, volatility. Stocks and index can swing from 5 to 15% on 70% or even 1000% on certain drops and pumps in just for a few hours. And I've seen Bitcoin halve overnight, unlike Apple stocks' gradual climbs. Third, regulation. Stocks have heavy oversight from the SEC, making them safer for long-term investing. And I personally started with dividends with 4 stocks for steady income. Because crypto's decentralized and very Wild West fewer rules, it just means that more innovation, but also higher scam and risks. Fourth, liquidity and access. Stocks need brokers and often minimums. Crypto's easy entry via platforms like LBank, microtrades are now possible. And from my experience, stocks built my patience for compounding, while crypto honed my quick reflex for trends and technical analysis. Learning about that. And I would say that both have wins, so I suggest diversify. So, which would you trade more? And comment below, like, and follow for more insights. Wolf A-Quant out. Crypto's full of gold, but also with risk and traps. Like for instance, honeypots, rug pulls, and as a trader who's experienced some and dodged a few, here's how to stay safe. Honeypot. These are scams tokens where you can buy in easily but sell it's really impossible due to coded restrictions. Like a one-way trap, we're stuck. Creators hype a project and they just really attract investments and allocations. Then abandon it by selling off the holdings or removing the liquidity. Value crashes to zero. And I've seen DeFi projects vanish just for overnight. Other bad actors in the space with phishing sites mimicking exchanges, fake airdrops stealing wallet keys, and that's what we call drainware, or pump and dump groups inflating degen or junk coins. So I wanted to give you some tips to protect yourself. So first, always do your own research and check for contract audits on tools like RagDoc or Etherscan, as well as use hardware wallets and never share your seeds phrase. And you should always verify the team on LinkedIn, as anonymous developers are a huge red flag. So I suggest start small, set slippage low on dexes, and watch for unusual tokenomics. So that's how you can learn about the tokenomics by studying and reading the white paper. So Here's my last conclusion. Scams evolve, but smart habits win. So, share your close calls below. Hit like, follow, and trade safe with reputable platforms. Wolf A-Quant out. Aiming and dreaming to be a... How can you trade smarter and not harder? And as someone who's aiming and dreaming to be a quant trader, here are my top tips on goals, risk, and profits to level up your game. First, set realistic goals. Define your objectives like 5 to 10% monthly returns and not just on the get rich quick strategies. Also, pick projects aligning with your style. For crypto, focus on solid fundamentals and study the white papers, but always back it with analysis and utilize tools like indicators. Second, risk management. Never risk more than 1 to 2% of your portfolio per trade, as it will have the potential to wipe out your whole portfolio. I would say greed kills. So you should plan your exit points upfront. For example, if you have entered a certain coin with an entry market price of 1.5 USD, I would say set your first take profit at 1.9 and then 2.2 and then 2.5 US dollars. I would call it the iceberg style of taking profits. And I suggest to track everything in your journal so you can review your wins and losses to refine your strategy. So apply this and watch your consistency. And for everyone, for every trader out there, please share your best tips so others can learn. Drop it in the comments. And as I wanted to conclude this video, trade wise, Wolf A-Quant